So that brings us to Mary Ellen, and we're going to give her a 3-minute head start. He says, very good. So let's go ahead, and I'm going to tell you a little bit about Mary. Mary is a bit of a newer partner for us. She works with, she does a lot of stuff with MEM trading. She does a lot of promotion, and she's related a little bit to Steve Primo. Today she's going to be talking about trading weekly options. It's the very first time she's been in a MetaStock Online Trader Summit. So she's going to talk about building weekly trades, using liquid trades to ramp up income generation. Let's go ahead and bring her on here. So Mary, I'm unmuting you. I should be able to hear you now. How are you doing today?
Oh, I'm doing great, Jeffrey. I
Okay.
hate to disappoint anyone who tuned in. I am actually going to be reviewing how to trade pullbacks in stocks.
Oh,
So,
really?
yeah,
Did,
my options knowledge would not fill a thimble. So,
oh, so what you're saying is somebody put their bullets together wrong.
mhm.
Oh,
Yeah. So this is all going to
um,
be about equities and how to trade stocks, and we've certainly seen a lot in the way of pullbacks here recently. We've seen even more than just pullbacks, of course, but that's what we're going to be focusing on as far as using charts to know what to look for and how to screen for stocks that could potentially reverse their downtrends, really. Yeah.
okay, okay. Good. I must have, just, I put together that slide. I'm sure we advertised the right session though for
You
you.
did. You did advertise it correctly, so we're good, and I can certainly.
You'll be happy to know that we haven't run across any serious technical issues. We had a little bit of an issue with my system tester in MetaStock, but so that must be the only mistake that'll happen today.
I'm hoping so. You're winding down, so it's looking good.
Yeah, I'm going to let you go ahead and take over.
Okay, sounds great. Okay, as mentioned, yes, this is Mary Ellen McGonagle, and I have my own firm, MEM Investment Research, but let me just go ahead and give a little bit of background for those of you not familiar. As Jeffrey mentioned, I'm a bit newer to the MetaStock audience, and as noted here, I do have over 25 years of experience both on Wall Street as well as working with Wall Street. I started out as a uh, assistant on the trading desk at Goldman Sachs many years ago, and from there I did go on to manage over 2 billion in assets, but that was during my time in New York City, and it was all with fixed income. But I did get introduced to the equity markets when I joined William O'Neill and Company, and that firm, for those of you not familiar, Bill O'Neill started Investors uh, Business Daily, Investors Business Daily, IBD, and the company at that time, I was with their institutional division, so I worked with top portfolio managers and analysts around the globe. And my role there was to introduce and educate them on the process of identifying and then profitably trading high, fast-moving, really high performing stocks. And these are stocks that were selected using a system that was built on many, many, many years of studying prior market cycles going back to the turn of the 1900s and really reviewing every bull market cycle, what were the common characteristics among those big winning stocks. And from there, a system was developed. This is a proven system that helps individuals now, as well as professional investors, uncover these big winning stocks. And then not only that, you of course need a system to learn how to profitably trade these stocks. They are going to be faster moving, both on the upside, but also on the downside. So you are going to need to have a system in place. So throughout my period, I was there for 15 years with William O'Neill and Company as a vice president. And throughout that time, just going through thousands and thousands of charts each and every week. And I still do the same now. It's actually a hobby, wonderful, but also as part of my work with MEM Investment Research. It's a firm that I founded over 3 years ago now, and I do still work with institutional professional money managers, but I've also broadened out, and I'm really excited because I'm sharing my many years of experience and knowledge with individual self-directed investors. And that's been really quite rewarding as part of my work at MEM Investment Research. I do have a biweekly newsletter where I talk about where we are in the broader markets, and also with an eye toward uncovering those next big set of winning stocks. And if for those of you interested, MEM Investment Research, I also have a lot in the way of courses that all are designed, again, with an eye toward uncovering these faster moving winning stocks, and how to, again, get this system in place so that you can also, equally important, keep your profits. That's going to be an course, a very important part of the equation. And today we are going to be reviewing how to trade stocks on pullbacks. And I know here it says how to screen for top candidate stocks. That is going to be part of our process today. We're going to be uncovering candidates for these stocks that pull back. And then from there, this pullback process is a period when stocks can essentially regroup. I will note that the work that I'm sharing today is from mid-July of this year, because the markets currently are in a correction. We're in a period, certainly, I'm sure many people discussed this already, we're in a period where the markets are doing more than just pulling back, but the principles that we're going to be reviewing today can be utilized once these markets return, once the uptrend, they get back into a healthy position. What we are going to be reviewing today can be put to work for you so that you can trade some of these stocks that have deteriorated here. So let's go ahead and get started. A brief disclaimer. I am going to be using a lot in the way of charts for examples, and all of the work is for educational purposes. We're not going to be having any direct buy or sell recommendations. And here's a review of what we are going to be covering today. The first thing that we are going to review is where you can locate the best candidates, again, when we're in a bull market phase. Also, precise entry and exit points. As these stocks pull back, they are going to have a period where they are going to, what I call, take off. And that's when, of course, you're going to want to enter the stock. So we'll go ahead and review that. And then also, which technical indicators are best for you to utilize on top of your charts so that you can be guided to the best and precise entry point. And then also stocks recovering from their pullbacks. These are going to be the candidates that we are going to be reviewing here today. And again, using history as a guide, we are going to have a lot in the way of charts that are going to go back historically, and we can use those examples to, again, move forward. So let's go ahead. We can get started at the beginning. The first thing we can talk about is which stocks will advance the most. And by that, I mean which stocks, when they pull back, will advance the most. And by and large, there is going to, and there always are going to be, pockets and areas of strength in the markets. And even today, in this corrective phase that we're in, there are areas of the market that will certainly, consumer staples and maybe utilities are not going down, but there are areas that are going down less than the broader market, less than other sectors or areas. And that's what you're going to want to pay attention to, because this strength is going to beget strength, if you will. It will, from history, tells us that the relative strength or stronger areas in the market currently, when the market pressures lift, those are going to be the areas that are primarily going to outperform. So that's where you are going to want to pay attention and really begin your search. We are going to talk about timing your entry as we get into this, and this is going to be using those technical overlays, those indicators that I alluded to. That's going to be really the way that you can time your entry. And then how long should you stay in the stock? And I always mention this because it's important for you as an investor, of course, to have a set parameter? Are you longer term in nature, or many people are intraday traders or shorter term? So that, of course, is going to be a primary ingredient as far as determining how long you stay with the stock, but also those indicators are going to help you as well. So let's look at some of the key ways that you can uncover top candidates with this concept of buying on the pullback. So we talked about this already. You want that industry group of that stock to be outperforming. And again, even though we are in a corrective phase, the markets have dropped significantly from their peaks last month or earlier this month. Actually October, you are going to want to pay attention again to those areas that are able to withstand the pressure that's going on around them. And you'd be surprised, there are areas that are actually whole groups that have pockets of strength, and that is where you are going to want to begin your search. I talked about Bill O'Neill and the system that was put in place, the proven system, and I'll tell you from his work, there was over 75% of a stock price upward movement can be attributed to the industry group that they are a part of. So it really is important for you to pay attention. I know MetaStock does quite a bit in the way of industry grouping and helping you sort that out, whether it's sector, or you can drill down even further to industry group. And then within that, just take a peek. It can be on a weekly. You can really screen going back the last 30 days would be a good way to do this. And you can screen for stocks that are perhaps down maybe 5, 6, 8% relative to the market that's been down over 10%. So you want to screen again, maybe over the last 30 days, look at that list of stocks and sort it by industry group, and you will see groups stand out as having a lot of stocks, or this is where the pockets of strength are going to reveal themselves to you. And then in this case, I talked about strong year to date, and again, I'm going to revert back to that 30-day period for you going currently. This is something that normally you would look year to date, but given the market dynamics, I would go back over the last 30 days. And then this third item I have is the stock, does it have a sound reason for doing well? And I think we're currently in the earnings season, and there is no better reason for a stock to outperform than having a company that is reporting earnings that are coming in ahead of estimates. We saw a lot of stocks that rallied despite the broader markets because of earnings, not as much as usual. But last week we did see a lot of stocks drop because they did not come in. They may have come in with flat earnings, they may have beat earnings a little, but because their revenues weren't there. So that's another number you're going to want to look at. There were some real big blow-ups last week, and it had everything to do with not coming in with revenues. So both earnings and revenues are going to be your really primary driver for a stock. There are other reasons potentially as far as developing a new product. Certainly merger and M&A activity is going to drive it. But again, those fundamentals are going to be that primary driver. So that's another thing that you want to key in on. If the stock is pulling back, it's going to have the fundamental backdrop to help propel it higher. And you want to see institutions involved in the stock. And this is another critical piece because these institutions, as you know, they manage millions, billions of dollars. And these institutions, these are the guys that are creating that chart that you're viewing. They're buying and selling regularly, and over 80% of the volume that you see on that chart is institutions. So make sure the stock that you are looking at does have institutional support. And I know that there are many ways that you can identify that as far as MetaStock and some of the services that they offer. And then also the economic backdrop. You want to see economic growth that can support a move higher. And certainly we are currently in a period of economic expansion. When you look, for those of you that follow that, the GDP numbers for the second quarter of this year were super robust. They just came out with Q3 numbers, also very strong. So we are still in a period of economic growth. So that is the kind of backdrop that you want to be putting your money to work. Of course, you do need to see the indexes and the broader markets in a healthy uptrend. And unfortunately, we're not quite there yet, but certainly the economic backdrop is there. So we talked about pinpointing your entry and exit points and using what tools can you use to help you do that. So oftentimes I'm going to review some points here, but as we go into the examples, this is what I'm reviewing here. I'm going to go ahead and review further, but I wanted to give you an idea. When you are looking at stocks, I talk about pulling back, you're going to want to use key simple moving averages to guide you. And these simple moving averages are simply smoothed out lines that you can overlay on your chart. They have various time frames, so we will get into that, but that is going to be one of your primary tools, is paying attention to the stock's action around these simple moving averages. And then the next area is volume. We talked about institutions and their actions driving a stock's price either higher or lower. So when I show you how to pinpoint these entry points, you are going to want to see volume as the stock potentially reverses its downtrend. This volume is telling you that institutions are in there. They are believers. They are supporting that stock, and that volume is going to really help propel the stock even higher. So we'll take a look at that. Also here, I'm talking about stocks, what are called breaking out of the right side of a base. So a lot of the work that I do, I'm looking for patterns within these charts. And for the pullback, you are going to want to look for that saucer type pattern. This will make more sense as we get into the examples, but you want the stock to break out of that saucer or potentially form the right side of that saucer base. Both of those are going to be very telling, all again relative to how the stock is behaving around its key moving average. And then if the stock drops below key support, that's really going to be, of course, quite critical, particularly if the broader markets are going higher. So if you see a stock, and we'll get into an example here as well, of course, the stock does not continue that downtrend reversal, again, that volume is going to be very critical for you to pay attention to. So let's take a look. Now, again, this is historical, so it's not current, but it is relevant. What we are looking at here is that concept. I talked to you about the need to see strength in that particular industry group, in that sector. So what we are looking at here is a chart that's going back to mid-July. This is the consumer discretionary sector. XLY is the ETF ticker for that, and consumer discretionary stocks are generally consumer driven. Of course, you'll see a lot of retail names in there, leisure services. And so as we can see here, there are definite periods and pockets of strength that have emerged out of consumer discretionary. So this is taking you back to the beginning of the year. This is the correction that we saw at the end of January into February through April. But consumer discretionary stocks were one of the first industries and sectors to emerge out of that correction. And we actually are seeing very similar action currently with consumer discretionary stocks. There are pockets of strength there. So the ability for you to identify that, you can use this XLY chart. That's one way to identify it, or you can do that screen that we talked about. And I'm telling you, it will show you strength in the consumer discretionary sector. Again, currently not super strength, but enough to be very interesting. So let's talk about these simple moving averages, these smoothed out lines that we have on top. This is a daily chart of that XLY. And this green line is a 10-day simple moving average. So quite simply, this is the price action over the last 10 days is smoothed out, and a line is created on your chart. And when you're looking at certainly faster moving stocks, you will want that 10-day simple moving average. This red line is your 50-day simple moving average. And we can see this period back here in the beginning of July. That 10-day simple moving average was in an uptrend. The index pulled back very orderly and looked poised to continue higher. So that is a sign of strength. You want that ETF for that sector to not only be above that shorter term simple moving average. We can go back here to this period here in May, another very bullish period for the consumer discretionary stocks well into June. So this is the kind of bullish activity you're going to want to see in the sector of the stock that you are viewing. We're looking here at technology, another formerly leading sector of the broader markets before the correction, and same kind of principle where the XLK, in this case, we're looking at a daily chart of the technology sector. It's finding support at this upward trending 10-day simple moving average. Again, this is May into June, and we can see also into the beginning of July an equally bullish period. So that's going to be one of the ways that you can key in on how to uncover these candidates, where you want to be in industry groups that are showing strength, and that's going to be more wind, if you will, behind the proverbial sail for that stock. So let's go ahead and take a look at one of the first examples here. What we're looking at, again, is another daily price chart. This is MNTA, Momenta Pharmaceuticals. And so what I wanted to point out here are some of these technical overlays that we're going to be using. We do also here have that 10-day simple moving average, and we want the stock to be in an uptrend similar to this period here. And also the stock was a big winner going into this peak here in June. The stock was up almost 40%, but we did have this pullback here for the entire month of June. And so what we are wanting to key in on, of course, is the downtrend reversal. That's what we want to capture. So let's take a look at some of these technical overlays. Up on the top here, I have what is called an RSI. That's a relative strength momentum indicator. There are a couple of things you want to pay attention to with this RSI. One is the dashed line. That's what's called your net neutral. It takes you to that 50. So you want the RSI not only to be trending upward positively, but you also want the RSI to be above this 50, above this net neutral. And this is something that you can easily screen for, but so we need to see that in order to tell us that this downtrend is potentially reversing. Now, let's go down to the bottom here. We have what is called a MACD. That is a moving average convergence. Divergence is the full name of it, but it is another momentum indicator. Two things we want to key in on here. One is the black line crossing over the red. The red is your signal. The black line is that MACD. So this, as it crosses up above the red signal, that's a quite a positive action. Even more positive is when the MACD crosses above 0. So let's take a look. Here we are with a stock that had an explosive move year to date into June. Stock pulls back. Now we're wondering in the event it were to reverse, and this is something you can use for all the stocks that have pulled back and then some in the current market environment. Same type of principle will apply. So what we are looking at is, again, that MACD turning positive, the RSI turning positive. And if we line all that up with the stock's price breaking back above that simple 10-day simple moving average, we can identify a buy point. So I should have clarified or at least signaled this a little bit clearly, but it'll make more sense as we go along. You can see how these each of these three signals are flashing simultaneously. And after following this pullback, actually this particular 40% number is the number is the increase from this pullback actually. But the stock had been a big year-to-date winner prior to that. It actually, let's take a look, it was up probably about 65 plus%. But this pullback and then your subsequent move here into the beginning of July was a 40% move from that pullback. So that's what you're going to want to try. You are going to want to capture. Let's take a look at another example. This is Align Technology. ALGN is the ticker symbol. The pullback in this particular stock was not as certainly not as severe. We're again looking at a daily price chart. So each bar on the chart is 1 day of trading activity. So take a look at this really nice bullish move here from May into June. This was a nice significant pickup. The stock really did quite well from here. Now this is the pullback that we are keying in on with an eye toward a potential advance out of this pullback. So what we are again looking at here is the stock enters into a downtrend. It breaks below this 10-day simple moving average, but we want to key in on is when it's forming the right side of this saucer base. I talked about that as being significant, where the stock does pull back, reverses that downtrend, and potentially breaks out of this saucer base as it hits a new high. We have that MACD. It never really turned negative, but this is that positive signal crossover, that black line up through the red. That's what we want to see. And then the RSI turns positive. So we can see that this type of activity, again, from going through many, many charts and many different cycles, this is a nice orderly pullback that indeed did go on to excel from there. Now, here's another example, RETA. This is a biotech pharmaceutical company and another stock that was a big winner into the end of June. We can see the stock pulled back, and that pullback is identified as breaking down below key simple moving averages. And we have a lot of stocks that have broken now down through their 10 and even down through their 50-day. So you are going to want to see the stock at the very least stabilize and then potentially form the right side of that base. And as the stock breaks out of that base, you're going to want to see that volume. Take a look at this volume here, the real nice pickup that's indicating institutional interest. The RSI trends positively, as does the MACD. So we can see the stock upon this pullback, as it breaks out of this saucer base and advances to new highs. That's ideally when you want to enter the stock as it begins to break out of the base on volume. So here is another example, and what we're looking at here is a company called Shake Shack. SHAK is the ticker symbol. And again, I'm looking for strength, stocks that were very strong, and we can see during this May into June period following their release of earnings, SHAK did have a really significant upward move here, over 50%. And the stock, stocks are not going to go up endlessly. They are going to have periods of consolidation and these pullbacks. And so we can see that this stock did do just that. It broke below this 10-day simple moving average, pulled back to this 50-day, and we can see again that saucer type pattern emerging. But this break back above that simple moving average is what you want to key in on, particularly if you can line it up with these other indicators that I mentioned. So one of them is the RSI trending and turning positively. And we can see that that is lining up really quite nicely. I've put in another, this is a fourth indicator that I like to use. It's called the stochastics. This is another momentum indicator. And for this indicator, two things, or three actually, are going to be really relevant. This also has that net neutral dashed line. So you want to look at the stochastics relative to that dashed line. And so we want to also pay attention to the slope of the stochastics. So when we're identifying these downtrend reversals, we want to see the stochastics being trending upward and breaking back above this net neutral line. That is going to be one of your indications. Now I will tell you, stochastics are faster moving than MACD. So this is going to be really relevant in today's environment. You're going to want to overlay these stochastics onto your price charts. And then also, so you can see where we can marry those three activities or actions together. The stochastics, again, the black line up through the red is going to be another signal, and it's trending upward, breaks above this net neutral. Stock price breaks back above the simple moving average, and we can put that in line with the RSI breaking back above this net neutral. So these three signals together are telling you that this downtrend is being reversed. So you can see too, one other thing that I wanted to point out to you with this stock, when we are in a period of healthiness and there's a bullish backdrop to the markets, oftentimes stocks that have come in with good earnings, and we are seeing this similar occurrence. Stocks are gapping up on strong earnings, even though the backdrop of the broader markets is still a bit wobbly. This is a sidebar, but that volume is also going to be critical there, because this volume, as the stock breaks and has a gap up, is going to continue to propel the stock higher upon that. A lot of times people think once the stock gaps up, the move is over. But in fact, oftentimes that gap up can really be just the beginning of the stock's move. Now, let's take a look at this particular stock. And what I wanted to point out to you is the fact that, pardon me, that here we're looking at the very same stock that we were just looking at. This is SHAK, Shake Shack, and I really thought it was important to show you that not all of these pullbacks evolve. So here we are, this is the pullback that we talked about in July. The stock pulled back to its upward trending 50-day simple moving average. It broke back above the 10-day, the green line, and it did so on volume. So it had all those characteristics that would have one think that this pullback was going to essentially reverse the downtrend. But not all pullbacks do, of course, work. So I wanted you to be aware of that and know what to look for to know that the pullback did not take hold, because in this particular case, SHAK, as we were looking at before, the company reported strong earnings, the market liked it, the stock advanced. This particular downtrend reversal or pullback failure was also earnings related. The company came out with numbers, the markets did not like it. So let's key in on what you need to know so that you don't stay in the stock in the event that the pullback fails. So very similar to what we were looking for on the upside, the reverse will be true. So we can see as the stock breaks below this 10-day simple moving average, take a look at the RSI. This is that relative strength indicator I talked about on the top here. We can see not only is the RSI trending downward, but it's breaking below this net neutral dashed line. And when we can put that together with the MACD, we have the moving average convergence divergence down here. We also want to pay attention to the slope. So when you get a downward negative signal, such as the black line down through the red, that's not in and of itself a negative signal. You would need to marry that with other characteristics. But here we do have three signals simultaneously that are telling us that the stock, that this pullback or downtrend reversal is failing. And in fact, we get even more volume as the stock continues to drop. So really relevant to have a system in place so that in the event, not just pullbacks, but if your stock's uptrend fails, you are going to want to be able to have a system that will help you exit that stock in a timely fashion. So let's go ahead, and we do have a couple more examples here that we can take a look at. This is a company called Salesforce.com. CRM is the ticker symbol. This is a very big stock in the software cloud computing space, and it is well loved by institutionals, investors. So what I wanted to point out to you here is the fact that this particular chart is taking us into the beginning of August. So I talked to you earlier about the concept of being involved with and being in front of stocks that have exhibited strength. So this is taking us back to the beginning of this year. We can see software stocks and consumer discretionary stocks led us out of the correction that occurred in the beginning of the year. This is CRM is, again, a heavyweight in the software cloud computing space. We can see during February that the stock really essentially ignored the downtrend and the correction that was going on in the broader market. So this is what I was talking about in the beginning. Identify strength when the broader markets are not doing well, and oftentimes those stocks will go on to be your leaders. And that's what we saw here with CRM. During February, it was able to well outpace what was going on in the broader markets. Once the market stabilized, CRM did go on to be a winner. But really, today we want to key in on that pullback. The stock was, it peaked here in July, peaked in price, and it really had a go nowhere environment and it dropped. This was in line with a lot of software stocks. The stock fell out of favor, huge volume, but really when stocks do this, and this was during a healthy period of the markets, you want to go back and look at how the stock behaves historically. Is it able to pull back to that 50-day and regain? And in fact, CRM has been able to do that. Oftentimes, this has been a good buy point for the stock. And so as the stock pulled back to that upward trending 50-day simple moving average, we can see that the stock's price, we're getting a couple of signals here. One, the RSI has turned positive, again, up above this dashed net neutral. And then also the price is going up above that shorter term 10-day simple moving average. We're getting a bit of a pickup here in volume. So we're getting a couple of positive signals here, but take a look. The MACD is not quite flashing positively yet, but we are very, very close to getting there. So if you do see 2 out of these 3 signals, oftentimes that will be enough. But ideally, as with any trading, and if you have a system in place that's giving you these signals, of course, the more positive signals, the better. But for here, 2 of these 3 signals would be significant. And let's take a look at the stock subsequent to that pullback. We can see that CRM did in fact pull back to that upward trending 50-day simple moving average. This is that RSI turning positively that we talked about. And we can see that the stock did advance out of that pullback. This is another daily price chart. And we kind of got that crossover here. We never really got that until further on in its advance. So using just 2 of those 3 signals would in fact been significant, or actually would have been enough to propel this stock higher. So this is that type of pullback action. And again, the stock has a very, very strong, sound fundamentals behind it. It also has institutional support. A lot of institutions own it. So a lot of those attributes that I talked about were in place upon this pullback so that you can have faith that when the stock reverses the downtrend, it will go higher. Now, of course, this is the ugliness that we have experienced here in October. A lot of damage done here, but the stock in this case has pulled back to its 200-day simple moving average. We're going to want to look for those same principles as far as identifying a potential downtrend reversal. We're just potentially getting that positive crossover, RSI kind of waffling around this mid net neutral area, but we've again gone through many examples of what you want to key in on and look for. So let's go ahead and see, take a look at some other examples that we can look at. Review here. This is a Biomed, ABMD. So all of these charts we're looking at daily. Daily is going to be helpful. The daily price action is going to be helpful when you are looking for these downtrend reversals. And what we're reviewing here actually is applicable really on any price chart. Intraday, it can be 1 hour. Of course, your upward advance out of that 1 hour downtrend reversal is going to be shorter. But for our work, we are using the daily price chart. So let's take a look. ABMD hit a new high in price in toward the end of June. And the stock, again, broke down below this upward trending 10-day simple moving average. That's your first sign of certainly a pullback. We did get this negative black line through the red, your secondary indicator that the stock is pulling back. But what's really going to be critical within these pullbacks, and you're not going to see a lot of examples given the current environment with all of the damage that we've seen, but ideally with these pullbacks, you want the stock to find support at this upward trending 50-day. Your 50-day simple moving average is going to inform you of the longer term trend of the stock. So you want that to be trending upward. You again pulling right back to that 50-day ideal before again bouncing off of it, in essence, forming the right side of the space. And again, during this October period, we did see breaks below, so that 200-day would in essence take the place of that 50-day with this pullback. And then again, as the stock breaks back above the shorter term simple moving average, you want that RSI to trend upward, and you also want to be able to marry that with that MACD crossover, that black line up through the red as the stock forms the right side of the base. So all of this is again very orderly. You're not seeing the stock, when we talk about pullbacks, if it begins to break the longer term simple moving averages, that is in fact very, very telling. Those were some of the first signs in actually the end of September into the beginning of October that things were not well with the markets. As they break longer term simple moving averages, you're going to see a lot in the way of repair that's going to be needed to be done rather than just a nice orderly recovery from that pullback. So let's take a look here. We do have another example. This is Macy's, ticker symbol is M. We're looking at another daily price chart. And again, everything that I've reviewed, as always, it does bear repeating because there is significance. I talked about you as an investor keying in on stocks that exhibit strength. And this is Macy's back in that May into the beginning of June. It had about a 4-week period of a significant uptrend, and there was a sound reason for it. Macy's came out, this is the release of their earnings, and you can see the stock gapped up on very strong earnings. So you had the fundamental backdrop that provided you with the strength. You had the volume showing you institutional support. So the backdrop is there. We also had a bullish market. So when the stock did pull back and in essence digest this significant move here in May, you can see where it pulled back to this upward trending 50-day simple moving average. Again, very orderly. We are going to key in on that break back above that 10-day simple moving average. The RSI turned positive. And then take a look at the MACD. It's just poised here in the mid-July period to cross back up above that red line and into positive, but it never really turned negative. We can see that it stayed above that net neutral zero line. So this pullback here is going to be really interesting as it begins to form the right side of the base. We're coupling it with those other signals that are telling you that the pullback, the downtrend is reversing. So now let's take a look at Macy's, how it performed subsequent to that pullback in July. So what we are looking at here is, this is the period of the end of that last slide that we were just looking at. So we talked about the stock breaking back above the 10-day simple moving average, the RSI trending positively. And then we did get that positive crossover here, the black line up through the red. We got a nice pickup here in volume. It's not super easy to see here, but this was volume that was ahead of average. So let's take a look at how the stock performed out of this, and we can see that the stock had about a 3-week advance. So the stock pulled back very orderly to an upward trending 50-day, had a nice 3-week upward move, but again, the downtrend reversal did fail. So this is really going to be important for you. You're going to want to know when it's time to exit. Take a look at this break. This Macy's broke below not only the 10, but also that 50-day simple moving average, huge volume. Your RSI trended negatively, your MACD negative signal crossover, black line down through the red, and then goes down below this net neutral. So all of these signals are telling you that it's time to exit the stock. This downtrend reversal in essence failed, and the stock did continue to decline. Of course, this is taking us to the October period in the broader markets. And take a look at this activity. The stock price began October in that $32 range, and the stock is currently trading at 36. Let's just make sure of that. Yes, 35.5. And this is what I was talking to you about in the beginning. You want to, here is a stock that in a period where the broader markets are down significantly, this stock is up. It's up about 8%. I'd have to take a look at it, but more importantly is the fact that it's not deteriorating. This is the August period for Macy's, and most any other stock that you would look at is going to be not stabilized as this was, but even more importantly, the stock is going up. So what I've said here is this could be another possible setup. Now, of course, we would like to see a healthy market as the backdrop, but this is as of the close yesterday. The stock price broke back above these simple moving averages. Take a look at that RSI. It's now back up above this net neutral. It's trending northerly in an upward fashion. We already got that positive crossover, the MACD black line up through the red, and it's poised to trade above this net neutral. So we had a pullback. I talked about that in this current environment. We're seeing stocks pull back further. They're not finding support at their 50-day as we saw back here, but rather they're pulling back to their 200-day simple moving average. So that's what you are going to want to key in on. But again, ideally, you are going to want to have the broader markets in an uptrend as your backdrop. That would really, of course, be one of the critical components before entering really any new trades, or maybe you can shorten the time frame of your trading just because of the backdrop of the broader markets. Let's take a look. This is another example. This is Fossil, F-O-S-L. This is another chart that is as of the close yesterday. So a couple of examples that I wanted to point out to you here, and they are in line with what we have been reviewing. For those of you not familiar, Fossil is a watch company, and they are in that consumer discretionary space. They are a retailer, and so let's go ahead back historically and take a look. I mentioned to you that consumer discretionary, a lot of those stocks during this February correction in the markets were really doing well. They were coming out with very strong earnings. This is a gap up in the stock price back here in the beginning of February. Again, in essence, ignoring all of the chaos and downtrending going on around it. But the stock did pull back from that peak here, that gap up. It pulled back to an upward trending 50-day simple moving average. So this is a very, very good example of the characteristics that you'd want to look for. So here in the beginning of April, we did get that positive signal. We got the RSI that trended upward. The MACD had that positive crossover, but the downtrend reversal, the pullback, really only held for about 2 weeks before pulling back again. You could have stayed with it because the stock, if you're a longer term investor, the RSI stayed in positive territory. And but for those of you that were maybe eyeing this pullback, this would be your new entry point here, as the MACD has a positive signal crossover and the price of the stock goes above that 10-day simple moving average on very, very big volume. I believe this was another quarterly earnings release. So you have that fundamental backdrop. And we also were in a very bullish phase in the broader market. So you can see that the stock entered into a significant uptrend. However, in June, it peaked in price. And this is in line with a lot of the consumer discretionary. A lot of them did lose their steam, if you will, during the summer months. Many of them were later as far as deteriorating, but this was a good example of a pullback that is actually, you can see it's about a 4-month period that the stock did enter into this downtrend. And take a look at the action now, because it pulled back below that 50-day right to that upward trending 200-day simple moving average. And we can see that, again, this is as of the close last Friday. The company is due to report earnings soon, but you can keep this stock on your watch list because the RSI trended positively as the price was breaking back above not only that 10-day, but also that 50-day simple moving average. We did get that positive crossover on the MACD, the black line up through the red, and we can see that the MACD is poised to turn positive. It's poised to break back above this net neutral here. See if I can get my cursor, but certainly I've pointed it out with the arrow. You can see it's poised to turn positive. So this is a very, very lengthy pullback, but it certainly still qualifies because it's finding support at an upward trending longer term, in this case, 200-day simple moving average. So let's keep an eye on this stock as it goes into earnings. So let's go ahead and review how you can screen for possible candidates for these pullbacks. And again, a lot of what I'm reviewing here today has in mind the fact that the broader markets are healthy. So these are screening criteria that you are going to want to take note of for when we are in healthier periods. So the first item that you are going to want to take a look at is screening for year-to-date winners up 25% or more. And again, this is with a healthy backdrop. Currently, as I talked about in the beginning, simply screening for stocks over the last 30 days that outpaced the broader markets can also set you up with some very viable candidates, such as some of the more recent names that we viewed. Another screening criteria is looking for stocks. Now, in this current, as of today, you're going to find it way too many names that are 7% or more off their recent highs. So again, with an eye toward a healthy broader market, if a stock pulls back 7% or more from its recent high, that's what you are going to want to screen for. And then another item is you are going to want to see that RSI turn positively. I pointed that out a number of times. You want that RSI to be crossing above that net neutral or dashed line. And then you need to see the stock above its 50-day simple moving average if it's well off its recent highs. Again, given the current market environment, you want it to be above the 200-day simple moving average. But in healthier environment, you do want that price to be above that 10-day moving average if the stock is not so much off of its recent highs, as a way to screen for these candidates that are potentially coming back and reversing their recent downtrends. So that is it. I did want to go ahead and review a really special offer that I have for a very, very short-term period. This is a course that is developed. I talked about a system, a proven system that will help you trade momentum. Now, momentum stocks are very fast-moving stocks, but I talked about the backdrop you'd need to see. So this particular course is going to help you. It's going to key in on how you can uncover the best candidates within these fast-moving momentum stocks. There are a lot in the way of historical precedent, a lot of examples. And this course is also going to show you how to pinpoint your entry and exit points. You are going to hear about the one key signal that's going to tell you that that upward momentum is over. And that's something that we touched on today as far as knowing when it's time to exit a stock. So this course normally retails for $197, and you can get it today for $9. There is a link there at the bottom, but for those of you, you can actually visit my website, meminvestmentresearch.com. You'll be able to access this very same offer there. And there's also a special offer on my website to trial my bi-weekly newsletter. Again, this comes out on Sunday and Wednesday, but there are also intra-week reports. If I see a stock or perhaps the broader markets are giving signals that are worth noting, you will be alerted to that immediately. And that is a trial that you can also access from my website, meminvestmentresearch.com. So I look forward to hearing from you. And also, if anyone has any questions, I always enjoy hearing from individuals as far as any questions relating to what was reviewed, and look forward to hearing from you. And again, take a look at my website. One last item on the website is my Mastering the Art of Trading Winning Stocks. That is a really, really fully developed 5-part course that takes you through each and every step in detail. And that is also being offered at a special price that is going to be ending tomorrow evening. And the course has tons and tons of bonuses, additional training courses, and full access to me while you are taking the course. So that's something else I would urge you to go ahead and take a look at meminvestmentresearch.com, because it is something, a special offer that will be ending tomorrow night. And this is a course that you are going to want to get because the broader markets are showing signs of potentially stabilizing and coming out of this correction. And we talked about pullbacks. The markets have certainly pulled back and then some, but some of your biggest winners are going to come out of this current market correction. And this 5-part course is really going to teach you how to uncover the next bull market's winners. It goes into great detail, fine tunes it down to how you can screen, but more importantly, how you can then actively trade those stocks that come, oftentimes the broader markets will, in essence, bring those next session or next bull cycle winners to you, but you really need to know where to look to help you identify these big, fast moving stocks. So I'm going to go ahead and see if there are any questions today. If anyone has anything that maybe they would like me to elaborate further upon. And I do see a couple of questions here. The first one is, when we do pick MACD, when do we use MACD versus stochastics? And that's a very good question. This is something that I talked about. You can use either indicator. Quite honestly, stochastics are going to be faster moving. I do tend to use the stochastics when I am identifying and keying in on the broader markets. And I want to see either a downtrend reversal when we were looking at the current correction, when the market started to break down. Those stochastics are really going to be super powerful for you, but they can also be used for stocks. So broader market really research is where I'm going to use those stochastics more frequently. And another question here is, how do you decide when the markets are no longer in a correction and are turning bearish overall? Is the 50 and 200-day breaks your main indication? And that is a very good question. Certainly those breaks are going to be my first indication. And that is the first key indication that the markets are in trouble, if they break below those simple moving averages. But I'm going to put that together with stochastics, and we're on the prowl now. I urge you to trial that newsletter for 4 weeks, because we're really in a critical period now. I've drilled down very specifically as far as what we need to see in the broader markets to turn bullish again. And those that are getting my newsletter are going to be alerted first to the fact that it's green light, you can put both feet in the water, so to speak, and where to put your money to work as far as the strength and where the stocks are that are poised to outperform. So that's really going to be quite okay. Pierre wanted to know, how can you know which sector a stock belongs to? And that is a very good question as well. Jeffrey, oh good, he put that in there because MetaStock is very good with that. They do a lot in the way of industry groups and sectors. They do all of that grouping for you, so you can get that information there. So that's super. I'm glad that that got answered. And then also,
Hey, Mary.
oh, sorry, go right ahead.
I'm trying to, I've been trying to type in the cq253.infusionsoft.com link, and it doesn't
Oh, okay.
appear to be a good link.
Oh, it's not active. Okay, let me, if you can, wouldn't mind. Oh, that's not good. Okay, well, I can certainly, as I said from the website, but I can go ahead and let's take a look. Oh, and on the site, it does not say $9, but I did go ahead and input that so that you can take advantage of that offer today, even though the pricing there is different. So I did go ahead and let me see if I can do this properly, and I apologize for the confusion, but I did go ahead and, oh, it shows up as an answer to someone else, but I did go ahead and put it in that answer box, the direct link. So that should work.
Oh, I think I got something to work.
Okay, good. I apologize for all that confusion, and I'll go ahead and modify it if it needs to be as soon as we end here in about 2 minutes. I thought I could get to, I apologize again for, gosh, for not testing that. It does show $29 on the website, but if I believe if you go ahead and access it, it should go ahead and qualify and go directly to that proper pricing. And someone had a question, do I trade Forex or binary options? And I do not at this time, but the principles that I applied here can be used certainly for Forex and any other futures. You can, if you can get the chart, you can use the information that I shared with you today. And Olga was asking about anything current as far as the current markets. And I talked about that we are still in a period where the markets are not quite healthy yet. I'm going to need to see, again, all based on a proven historical system. There are certain other signals that are going to need to come into play, but last week's action was promising and certainly very, very encouraging as far as the bullish move that we saw last week. But if you go through, I talked about looking at thousands of charts each week, and there's just ever so much damage that's been done that is going to need to be repaired. And the repairing is going to be, first we need to see the markets stabilize, then turn up. So last week was positive, but we're going to have to get closer to some of the prior highs. And there's other action that's going to need to take place before these markets really repair themselves. And I talked about keying in on the stochastics. Pull up a weekly chart of any of the indexes. Look at those stochastics when the markets came out of the correction earlier this year. It's current enough that you can look at that, look at where the stochastics are now, and do a quick comparison, and you'll see where we are now relative to when we came out of the correction earlier this year. That's going to be a great way for you to gauge the broader market's health. And then from there, I talked about ways that you can uncover strength. Oh, Patrick, great, it worked, super. Okay, and so yeah, and so all of these indicators are on MetaStock. Jeffrey, you're still there, yeah. He can confirm that you're going to be able to overlay those indicators. I believe my time is up, but I want to thank everyone today who attended and look forward to seeing everyone soon.
All right. Thanks, Mary. Appreciate having you in here.
Sure, you bet, Jeff. Talk soon.
Okay. All right. Very good. All right. How's it go? How are we doing, everybody? You guys having a good day? Let me know. Really appreciate you guys coming. There are a few things I'm going to ask you to do. We do have a little bit of a survey. Richard says, "Good job, Mary." And Alejandra says, "Oh yes!" Explanation point. Jeff says, I'm on the road driving. Nice name, Jeff, number one. I'm only catching about 25% maybe. But what I am hearing is interesting. We are recording the event for you. So the way that'll work is we'll go ahead and send you a recording or an archive for the event. We put them up on our YouTube channel. And what I will do is I'll send you a copy of that recording when it's ready. It takes our video team probably about 3 or 4 days to get it ready. So it'll be Wednesday or Thursday. And as soon as it's ready, I'll just blast it out to all of you guys. So Alejandro says, well done. Jerry says, are we all done yet? Nope. No, we're not. We've got one more session and we saved the best for last. So, or I shouldn't say it that way. We got one more, and then we're going to do a small Q&A. I'm going to show you a couple of. I'm going to answer any questions you have related to MetaStock. A lot of users like to kind of ask questions, but so that won't take very long. It'll take as long as it takes. I'm also going to show you a few of the things I've been doing lately in MetaStock that might help you. They've been helpful for me, particularly. Well, we'll just wait till we get there. Let me go ahead and turn the presenter back over to me. We'll get transitioned over to Vlad Karpel. So let me go ahead and show my screen. Do want to remind you of the Trader's Toolbox. Thank you for everybody that's ordered so far today. It's really appreciated. We have all 4 of the add-ons that we're selling. Normally those are $3,143. You'll get 2 years of Stocks and Commodities magazine, 3 months of access to MetaStock Real-Time and Zenith, Unleash the Power of MetaStock. Normally that's $4,138, but you can get it for $1,796 today. So our sales guys are here. They're a little bit less busy than they were earlier. So if you tried to call, couldn't get through, give us a call, 800-882-3040, or visit us online at metastock.com/sales-chat. So I do want to spend just a second more thanking Stocks and Commodities for sponsoring today's event. Hopefully you got your free subscription or your free issue, and